Welcome to the Kickstart My Franchise podcast. I'm your host, Tim Michaels. Today, I'll be chatting with fellow University of Michigan alum Ariez Dustoor. He runs a private equity firm called NB Group Investors. Welcome to the show, Ariez.
Thanks for having me on, Tim. Excited to chat with you.
For sure. So, how exactly did you get into the private equity space? Maybe just give us a little bit of your background.
Sure. So, after graduating from college, I'd spent a couple of years doing management consulting at a large strategy consulting firm and did that for a couple of years. Enjoyed the work. It was amazing training right out of school, but I knew I didn't want to do that as a career path. And so I had an interest in investing, and I felt like private equity solved some of the issues I saw in consulting. And so I ended up kind of joining a private equity firm in Boston in an entry level role way back in 2008. And so that was my first exposure to private equity as a career. And then after that, I ended up leaving that role and did different roles after that, including sort of corporate development and then really sort of more entrepreneurial ventures before starting our firm. And I wanted to get back to private equity investing, but do it in a different format and start my own firm. And I had a close friend of mine from college with relatively similar career path. And so we came together in 2017 and started our firm. And so we've been doing this investing under our own umbrella now for going on 8 years.
Oh, wow. So you guys have been around for a while. This isn't an upstart at this point.
No, it doesn't feel like it's been that long, but we've been doing this for about 8 years. We've closed 4 platform transactions or platform investments since we started the firm. We've had one very successful exit, and really focused right now on trying to find new investment to add to our portfolio, and then just working closely with the companies that we have.
So for somebody who's not really that familiar with the private equity space, for, as you said, platform transactions, that number doesn't sound like a large number over that period of time. Like, can you talk about like just the sheer volume, and like, is it the type of industry where there's just a very low like close ratio, but you're always looking at deals, or like what does that look like?
Sure. So we have the short answer is yes. We're always looking at deals, and there is a low close ratio. So we have you can think of it as a funnel. And so at the top of the funnel, you have opportunities coming in every day, and you're working those down the funnel. So some of them obviously are immediately a no. So someone sends us a oil field services business in West Texas or something, not a fit for us. It's quick, takes us 15 seconds to say no to that, right? And then you have other opportunities that look interesting, and you're sort of moving them through to get to that next stage. But to get to one sort of deal that we end up closing, we might look at 500 to 1,000 opportunities at the top of that funnel. And I don't think that's probably fairly typical. Each firm's going to be different, right? But you're going to have a pretty that kind of narrow funnel is a pretty typical approach. Different firms have different philosophies on how they construct their portfolio and how big they want it to be. There's firms out there that have the opposite approach of us, which is that they have very large portfolios. They might have 50, 60, 70 or more platform investments in their private equity portfolio. For us, we've taken the opposite approach, which is that we want to have a concentrated portfolio. So for us, that's, call it 3 to 5 really high quality companies that we're closely involved with at any given time.
That's awesome. And talk a little bit about sort of your investment criteria. Like, what are you guys looking for? Are there specific like ranges of, EBITDA or things like that?
Sure. So, I'll tailor these. We in franchising is a core piece of what we do, but it's not the only thing that we invest in. For our purposes, I'll sort of obviously tailor this to the franchising space. So there's 2 types of franchise investments that we'll make. One is in franchisees, and then one is in franchisors. We've historically had more experience on the franchisee side, But given the experience, the success we've had there, we are starting to look much more heavily at the franchisor side as well. And so two different business models, and therefore the criteria can be slightly different for either one. But from a financial perspective, I would say we're typically looking, if it's a franchisee, we're looking for businesses with at least $10 million in revenue or sales, and then call it $3 million of, use your term, and we think of the world in terms of EBITDA, but kind of think of EBITDA or cash flow. So 10 of revenue, 3 of EBITDA. On the franchisee side, we will dip below those levels. So we would look at things even as small as, call it 5 of revenue and 1 of EBITDA. In on up. So we'll look at much larger opportunities as well. So for example, we've looked at opportunities with 15 or 20 million of EBITDA. So that's kind of our size range from a purely financial perspective. And then, underneath that, there's lots of other business characteristics or financial characteristics that we're looking at depending on the business.
And are you guys typically taking over like the entire company, or what does that look like? Is it just like a cash injection? Like,
we're very flexible. So it really depends on what is the business owner looking for and what does the business need. So generally speaking, we're looking to own 25 to 80% of a business. So if we're owning 25 to 49%, that's a minority. We're taking a minority position in the business. If we're owning 51 to 80%, we're taking a majority position. What we're usually not doing is taking a 100% position. We like to have that alignment with the existing owner and team that we want them to own a really meaningful piece of the business going forward, so that we feel like we're well aligned with them. In terms of when we buy that ownership, the cash that we're putting in, we're investing, what is that being used for? I would say, generally speaking, the primary purpose is to provide liquidity to the existing owners. So you spent years or maybe even decades building a business. You've got all this equity that's sort of just trapped in the business. And so we help you unlock some of that. But in addition to that, our capital can be used to effectuate acquisitions. If a company has certain growth opportunities they want to pursue, opening new units or taking down a territory agreement or investing in the team or whatever it might be, we can use capital for those purposes as well. And then I'd say, there's other uses, like oftentimes people have taken personal guarantees on loans, SBA debt, things like that. And so we can sort of help clean all that up using capital.
got it. Makes a lot of sense. One question I get a lot from people is around sort of the exit opportunities of starting and growing like a larger franchise system. Can you talk to me a little bit about like what kind of multiples do you typically see, on the low end or high end? And does it vary a lot by industry or by the size of that actual company?
Yeah, so I would say if you think about the franchisee side, so you're a franchisee that's you've built a business, and it could be a restaurant business, could be a coffee business, could be commercial cleaning, gyms. I mean, whatever it is, right? You've built this franchise business, and so the question is, what is it worth? People always want a super specific answer, and there's not some calculator like formula that we put the numbers into. Having said that, I think generally there's kind of 3 big things I would think about that are going to drive your value. Why do you get a higher value or a lower value? One is just scale. So if you're let's take an example. You're a restaurant franchisee and you have one store with $1 million of revenue and 200,000 of EBITDA. Not obviously your absolute valuation is going to be much lower than someone with 24 stores, but also typically the multiple is going to be lower because you just have lower scale. So there's sort of the scale of the business. That's a key factor. I think the second is the growth of the business. So ultimately, we will pay a higher valuation multiple for businesses that are growing more quickly or have the potential to grow more quickly. If your business is not growing or you don't have that many growth opportunities, it's going to limit our ability to pay for that. So that's a second piece. And then I think the third is the industry. So there's some industries that, for different reasons, tend to have structurally higher valuations. And there's others that have lower valuations. And so those are kind of, I would say, the three big pieces. I mean, there's another bucket of other things, and there's a lot of items in that. You know, for example, management quality, or are you in a particularly attractive region of the country? What's the quality of the franchise system? That's a big one too. And so we sort of put together all these factors and come up with a valuation.
When you think about the different industries that are out there, can you talk a little bit about like which industries you tend to see in those higher multiples and which ones you tend to see in like the lower multiples if you just had to make a huge generalization?
Yeah, and I should say that when I talk about industry, I mean, I would think of it, it's both like sort of an industry, but it's also a franchise system, right? So there's certain systems where it commands higher multiples. So I can talk to like some of our own experiences, for example, that we've had. For example, we have been an investor in Crunch Fitness franchisee. So it's in the gym space. It's called high value, low price gyms. Crunch is one of the leading players in that space, right behind Planet Fitness, which is another franchise business. And so we've seen multiples for Planet Fitness and Crunch. I think over time they have risen, and they've also tended to be on the higher end versus other gym chains, other franchise concepts. And I think there's a couple reasons for that. But one of the primary reasons is that those franchise systems, have been growing and taking share in the market. And so as an investor, I'm willing to pay more to be in those systems because there's a lot of white space growth opportunity available. I think the second reason, specifically in this example, are those businesses, the stores tend to generate more cash. They're more profitable on a per square foot basis than a lot of other franchised gym concepts. And so that would be an example of brands that we would consider sort of premium, and we're thinking are getting above average multiples. I think another example where we haven't invested in it, but we've sort of looked in the space, is there certain QSR or restaurant brands that I think more than anything have great longevity, right? You think about like a McDonald's, Dunkin' Donuts. These are brands that have been around for decades. People feel like they have a ton of staying power. They're super stable, and they tend to have really good same stores. It's not like there's tons of white space for these brands, but they have very strong franchisors and same store sales stories. And so those tend to trade at kind of like a premium to other brands that don't have that.
So let's say, I'm a franchisee. I'm thinking about bringing on an outside investor like yourself. What are some of the pros and cons of doing that? And like, what should I be thinking through when making that decision?
Yeah, I mean, it's a whole nother probably 2-hour podcast to like unpack all of that. But I think a couple things to think about. So I think it's sort of a pro and a con, is that when you're running your business, when you're an entrepreneur, you're CEO, it can be a very lonely position. So you're sort of doing everything on your own. You have to figure everything out on your own. And I think having a partner that's alongside you, that's bringing a different perspective, can be extremely valuable. And I would say in particular, we see a lot of businesses where they feel like they've just kind of hit a little bit of a ceiling. And what they need is someone else that has pursued certain growth strategies or has been able to scale a business beyond where that owner has taken it. And so bringing an outside partner like us in can be very helpful. And it can oftentimes be the case that you're going to get to that next level of growth on your own, but it's going to take you a lot longer versus doing it with a partner like us. I think the flip side of that is that you're bringing someone else into the mix, right? It's not, when you run the business, you can make all the decisions. You can do whatever you want, good or bad. And so there is that loss of control that I think you really need to think about. Are you okay with that? And I think that's where finding the right investor that's truly a partner becomes really important, because you're going to be working closely with that person after the investment. I think another key benefit of working with someone like us is that when we just bring resources to the table that you might not otherwise have. So, and that can really be helpful is in pursuing growth strategies. So if you think about like a very typical one in the franchisee space would be M&A. So your ability to execute on acquisitions of other franchisees, that's sort of one of our kind of bread and butters in terms of what we do. And so we can help you do that, probably to an extent that you're just not going to be able to on your own.
Yeah, it makes a lot of sense. So is there a good timing as far as like in my growth process when it makes sense to consider bringing on someone like yourself? Is it, when does it make sense?
It's going to be a highly individual answer to each franchisee. I would think about a couple things. One is, do you feel like you're hitting a bit of a ceiling in terms of where you could, with your skill set, your knowledge, your capital, are you hitting a ceiling on how large you can make that business? Do you really need, we have this conversation all the time where people feel like there's a lot of opportunities out there they could be pursuing, but they've sort of reached a point in the scale of the business where they're not necessarily sure how best to approach them, or how to pursue them. So I think if you're starting to feel like you're being limited in that respect, that's one time. I think that's a point in time where you should start thinking about, what does it make sense to bring someone else on to solve that problem. I think another is if you are thinking of transitioning to either a different role at the company. So do you feel like, I love what I'm doing, I want to continue growing this, but I'm not sure I'm the right person to do it? Or, I love focusing on new site selection or working with the teams in our stores, but I hate all the other stuff I have to do. I hate dealing with the bank. I hate dealing with HR issues. I hate dealing with the daily, hourly operational rhythm. Someone like us can help effectuate that transition. Like, hey, let's go figure out, how do we build out the team to allow you to go spend more time doing what you want to do, and we solve some of these other problems. And then the other instances where you're just reaching a point, maybe you want to retire, maybe you got kids but they don't want to take over the business. Maybe you don't want to retire, but you've got some other interest you want to go pursue, and you need to figure out, how do you create that transition path? I think that's another really good point where we can come in.
One question I get a lot from some of my larger investors is, let's say I own one particular home services brand, I don't know, plumbing. Is it better for me to grow one massive plumbing business, or is it better for me to own, like, let's call it 3 to 5 territories of this plumbing business and then tack on an HVAC business and basically create like multiple different service lines in the same area versus like one giant, geographic area?
It's not a cut and dry answer. So I think there's instances where focusing on one brand, gaining scale in that brand makes more sense. In other instances, it makes sense to try to become multi-brand. I think one reason to go multi-brand is if you feel like you're hitting a growth ceiling with a single brand, right? So if you're only focused on one brand, and maybe that franchise isn't growing, or there's not growth opportunities within it, then you need to start thinking about, okay, well, how do I keep growing as a franchisee? How do I grow my business? And then it can make sense to add on a second brand. You also see this problem where at some point, if you're being really successful in a single brand, the franchisor is going to put a cap typically on how large you can get. They don't want a single franchisee that owns, half their system or something like that. So that can also moderate your growth a little bit. So I think those are instances where, if you're hitting that growth ceiling, it makes sense to bring on a second brand. Or if you see a great opportunity that is highly complementary, where you say, hey, I've got this infrastructure that I can leverage, or know-how, or built up knowledge, and now I can take that and go grow in a second brand. I think what I tend to not like as an investor is when I see people that are spread across multiple brands, but not deep in any single brand. And I think when you're not you have no depth in any of the brands, it's hard. I think there's a natural question, which is like, why? Are
Hmm.
you not seeing opportunities in those brands? Is there some problem with the franchisor? Is that concept or that franchise system have characteristics that make it hard for you to grow? So, you don't want to just sort of grab onto every single thing. And then you also you spread very thin. It's hard to be really good at, you know, if you're relatively small and you've got 3-4 brands that you're working on, it's hard to be great at any one of those brands. So I think there's different things to think about.
Is there like any sort of rough cutoff that you would think as far as like what is deep? Like, is that typically like 3 territories or 3 units, or is it? I mean, obviously, if it's one unit of a $2 million, trampoline park, that's going to be a little different. But for like a home services business, is there like a cutoff or threshold that you would sort of put in, or?
You mean where I would say you should start thinking about expanding to another brand, or
Well, I
or
guess
where
when you
you're
were
saying you're
saying
not?
when you were talking about like, okay, you own 3 or 4 different brands, but you don't really have depth in any of them, like what is the cutoff and which you consider having depth? Is that a number? Is that a number of territories?
Yeah, I think it's going to vary depending on what the concept is, but I mean, I would think of it as some combination of just revenue size. So have you achieved a certain scale in a single brand? If you have $1 million of revenue in a single brand, like that's not scale. If you're maybe starting to get to 10 plus or much more than that, I think then you're starting to get to scale. I think it's also probably depends on the concept, but if it's a store-based concept, you're going to want to have multiple stores, probably in a single region, like some density. It's going to vary from concept to concept, but I would say that's probably 6 to 10, maybe in a single brand at least. And then from a territory perspective, again, depends on how big are the territories, things like that. But I would think if it's a reasonably large territory, say it's a whole state. I think that's fine. You can be in a single territory, but you'd want to make sure that you started to build out density within that territory.
Yeah, makes sense. Anything, else you want to throw out there? I think you went through all my questions.
We love franchising. We're excited about the opportunities we see both in franchisees and franchisors, and so always happy to chat with folks about what we're seeing out there, or if they have a business they're trying to figure out what they want to do or what the pros and cons are of working with an investor. I'm happy to have that conversation and give candid feedback. Taking on an investor is not the right fit for everyone, and we're happy to have that conversation.
Awesome. Well, really appreciate you coming on here. It was super interesting.
Yeah, thanks for having me on.